Hello, everybody. My name is Donald Green, and this is the First Fruits Stock Club show. I'm so excited. I have a show for you today. Just want to thank you guys for giving me a few moments of your time. I know that the world is crazy. You have a lot going on in your life, but I hope to bring value to you today. Today, I wanted to discuss um, this is, ooh, my glasses are crooked, whatever. So last week, I actually did a show on the initial scene in the podcast, which is Jerome Powell, who's the chairman of the Federal Reserve, and President Trump. So Jerome Powell, while Donald Trump is the leader of the free world, okay, Jerome Powell is a financier of the free world, right? And it's not only a thing of um, what President Trump thinks of in regards to how Jerome Powell is pertaining to his job. Like, is he performing? It's not just about his performance. I want to kind of dig down a little bit deeper, another level to this. And what it is it's also a personality clash. Okay, a personality clash. Okay, you have Jerome Powell, who's a very to be a banker and a financier of the free world. You have to be have a personality. Most bankers are. I'm not gonna say everyone is. Okay, but most bankers have a very structured personality, means they follow rules and procedures. Right. Um, his one of his rules is, hey, 2% of inflation. All right, and and stable prices. Okay, the Federal Reserve does not want prices going up and down. Where one day you go to the store, you're paying $10 for a loaf of bread, the next day you're going paying $1 for a loaf of bread, whatever. Okay, well, and Donald Trump is a very demanding, strong personality. Says, look, I don't care about your your procedures, your policies. I don't care about them. I told you I want low interest rate. I want you to cut interest rates right now, right? And I think one thing, this is what I discussed last week, we forget that President Trump is a former, well, he still is, he's a real estate investor at heart. Okay. He's a real estate investor. And as real estate investors, you want low rates, right? Um, when you are, look, a former real estate investor, I don't own any properties right now, besides my primary residence. But I've owned a lot of properties over the years. And the main cost of properties is debt, what's called debt service. Okay. Debt service. That means if that means your mortgage, right? And for if you're a real estate investor, debt service meaning basically what it costs for you to pay your mortgage, right? And it's expense. It's one of the largest expenses you can have, right? So you look at all your expenses in a property basically to keep it up, and debt service will become it is usually is one of the largest expenses you have. So the lower your debt service is, okay, the more profit you can make as a real estate investor, okay, and so that's where I really think that this is about it's about Donald Trump's background as a real estate investor and also uh, Jerome Powell's chairman of the Federal Reserve, his personality is being structured and following the rules. And Donald Trump does not care about your rules. You know, he's a very demanding personality. He says, I want you to do what I want you to do. Okay. This is something we really need to pay attention to, right? Because we're talking about the financier of the free world who has control over the rates of our interest rates, right? What we pay for houses, what we pay for cars, who has control over that. And of course, uh, President Trump, who's flexed his control as president. Like, look, you do what I say, or you're not going to be around, or. So that's the battle that's going on. Who's right? Who's wrong? I'm not here to discuss that, but I will say that we have to watch this as investors because if there's not stability, in that spot. And I'm not saying that we have to have stability because President Trump can also bring who he wants to put in that position. Okay, but between that time where if he decides to get rid of Jerome Powell, right, and he brings on his who he wants, um, then there will be turbulence in the market. The issue that we've had with the bonds, the rates rising, they will raise again. Okay. I can almost guarantee. I can't guarantee anything, but I can almost guarantee that. Okay. So we will have some issues in the market in regards to that. So I just wanted to discuss that and try to revisit that because last week I discussed this and I knew it was coming, and it's good to see things coming. So like I said, what we as investors we have to be forward looking. Forward looking. Okay. So the real title of this show, um, and I'm gonna get to it right now, and I'm gonna discuss it. So dollar depreciation. I just want to say that if you're watching this, I promise you are a great person. Like you probably done everything you was told to do. You went to school, you have a profession now, um, you're great with people, you help old ladies cross the street. You've done everything that you're supposed to do as a good citizen. You're not frivolous with your money, right? You've done all these things, and but no one has told you that you could do all the right things in life, financially, all the right things. And the money that you've earned will depreciate, right? The dollars that you earn will depreciate in value. No one has discussed this with you because you've done all the right things in life and you continue to do all the right things. But financially, it seems like that you can't get that next leg up, that momentum. And I promise you, I know it's not your fault. Okay, all of it isn't. Okay, so today we're going to discuss dollar depreciation and what does that mean? Like, why is it a negative standpoint, and can it be positive? Okay, so this is a slideshow. So dollar depreciation. All right. If we look at the United States dollar, U.S. dollar index, okay, since for the last 3 months, okay, all right, January through March, the price of the dollar has decreased tremendously from 110, almost $8, sorry, $10 plus, okay, $10.18. Um, and it continues to slide. What does this mean? What does this mean? Okay, so let's define it. Dollar depreciation is when the price of the dollar slides. It means the value of the U.S. Dollar is decreasing relative to other currencies. Okay, so let's see what it can apply. So dollars versus other currencies like the euro, the yen. It takes more dollars to buy foreign currencies. Like this is important when we talk about imports and exports. It takes more dollars. Okay. Conversely, foreign currencies buy more dollars, making goods cheaper for foreigners. Right. So if we look at it, this is a great strategy um, if we're trying to export more goods throughout the world, because the foreigners' dollars, when they convert them, foreign currencies, when they convert them, um, they'll be worth more in dollars. Okay, and therefore they're able to buy more things. So um, exports should go up, right? In this environment. So, of course, what I just said, imports get more expensive, U.S. exports become cheaper and more competitive abroad, which can boost demand for American-made goods. But this is the problem, and this isn't something that will happen. This is something that can happen due to having a weaker dollar. Okay, it can contribute to rising prices. Okay, especially imported goods like oil, electronics, and clothing. This is interesting because the price of oil has been going down up to this point. The price of, even though the dollar has been it's been deflating, the price of oil is going down. But we just wait and see, because we have to also look at that travel season during the summertime is where oil prices usually will spike, because people travel more in the summer than during the winter. So we'll see if this has changed. This is future looking, all right? Electronics and clothing, right? This is, if you haven't heard on the news, a lot of companies are hurrying up and buying goods, or started stacking up on goods and products that they um, import to create their products, just for the fact of they knew that tariffs were the possibility that tariffs were coming. Okay. So as an investor, foreign investors may be less attracted to U.S. assets, fearing weaker return on their own currency. Okay. However, U.S. multinationals may benefit because their overseas earnings, or if these are companies that do business overseas, they have a like Coca-Cola, um, they have subsidiaries um, throughout the world. Okay, and the money that they earn, okay, over there, when they convert it back to dollars, will be should be worth more, because when they convert it back to dollars. So, from an investor perspective, what does this mean to us as investors, right? Export oriented stocks such as industrial tech should have a positive outlook. You're not really you're really more exporting than importing things for technology, right? Things are basically done through over the web, um, and so you don't have to worry about having any products coming in and exporting or importing any products to make your goods. Import dependent companies such as retailers are negative because higher import cost, right? So commodities, oil and gold, positive, priced in dollars, become more valuable. Okay. So let's look at this. Gold versus the dollar. So you know, sometimes you get on things late, okay? But everyone was wondering, like, why is gold doing what it's doing? But truthfully, the last few years, um, central banks have been loading up on gold, like they already knew what was about to happen. Like they already knew who was going to win. Okay, I'm not saying, I don't know, but they have been purchasing gold throughout the world, loading up on gold, and less in dollars. So when the dollar strengthens, gold tends to fall, and vice versa. Okay, so these are two gold ETFs. If we look at it 3 months into the year, from January 1st, GDX um, is up $13.91. And so let me give my disclosure. Um, all investments or investment ideas are for entertainment purposes only. I'm not your financial advisor. I do not know your financial situation. So you invest at your own risk. Okay. So GDX is as you look at the first chart where the dollar has been going down, right? But GDX, which is a gold ETF, have been going the opposite way. So that proves the fact of what happens as you see the value of the dollar going down, but the value of gold going up. Okay. All right. Here's another ETF, Spider Gold Shares. Same thing. Since January, I did this for 6 months, but since January, it's been increasing in price versus the dollar, which once again has been decreasing. So that's something, gold is something you may want to add to your portfolio. But um, I think that I do think that there will be a rebound towards the end of the year in regards to technology. So, I mean, can't guarantee it, but I do see a rebound. So what happens is, as when that rebound comes, then the price of gold, because so basically what traders will do is they'll sell what's been working, gold, and they'll move into what is lower price and has a larger return, outside return, which is technology stocks, which are down 10, some of them down even 50%, excuse me, on a year. Okay. So great time to maybe look at adding um, gold, maybe a little bit. Okay. But also, I like cash right now. I think cash is probably the best place to be right now till we get some stabilization of the markets and what's going on. Because uh, and after a while, what happens with tariffs is that the market will get tired of hearing about it and get used to it, and will already have priced it in, and it will then therefore continue to move forward. Okay, so you don't want to ever be like out of the market, because when it starts moving, it'll start moving. Then everybody will start jumping into it. Then the prices just start skyrocketing. Okay. All right. So you always have to play both sides, but having a little bit of gold in your portfolio, maybe don't go extreme with it and take everything out of technology. I think gold and having cash on the side right now until we get some clarity in the market is a great strategy. All right. So what happens is gold becomes a safe haven um, asset, right? And safe haven demand is driving gold. So with a stronger dollars, investors are looking for safety, looking for a place to put their money where it doesn't depreciate in value. So because what happens, if you've seen, if you keep your money in dollars, where it's going to buy less things at this time, and we haven't seen it yet. And I think around September, I think we're really going to start to see um, the prices, the results of tariffs. So, and gold is a safe haven asset, and gold is, usually becomes an asset of choice when you have geopolitical tensions, wars, and conflict throughout the world. Recession fears, uncertainty in the stock market. If we've seen that, recession fears, uncertainty in the stock market, banking concerns, distrust in fiat currencies, which is the dollar fiat currency that's not backed by anything. Gold is seen as a store of value. Okay, when people get nervous, even when even if the dollar is strong, they still pile into gold. Okay, so that's one thing to always add in your investment arsenal. Always look at having a supply of gold, especially when we never know when there are going to be tariffs. I mean, there are going to be conflict and tensions throughout the world. Anything can spark it. Wars come at any time, you know. So having some gold in your portfolio, I think is a wise decision. All right. The Trinity. Always got to discuss our Trinity. Our Trinity, basically, right now is we're happy sitting in cash and sitting in dividend stocks, earning cash until things get better. Um, Options. I have not put any option plays inside of the club, um, but we'll see. Maybe I'll put some in some small option plays and long term portfolio. I think it's a great time to add to your long term portfolio where you have an outlook of 3 to 5 years. Okay, it's a great time to do it. I like technology. We know technology is going to run the world. Um, it's going to rule the world, and I love technology being a part of that. Okay, thank you guys so much for joining me. I hope you enjoyed this show. If you have some information or if you have a concern and you're like, hey, I want to learn about this, send me a DM. And or you can always join the First Fruit Stock Club, right? Take your investment to the next level. I'd say we are the number one Christian investment club in the world. We're growing, man. We're growing. So I say get on it, and get on it for this market turns. I'm putting in investment plays all the time. What I think is going to happen right now, and developing super dividend portfolios that we can use that income to invest in options and invest in a long term portfolio. Okay, guys. Until next week, I'm gonna leave with my mantra. Everything in my life is fruitful. My family bears good fruit. My finances, I bear good fruit. And my fitness and my health, I bear good fruit. Everything in my life bears good fruit. My portfolio bears good fruit. Thank you guys. Thank you for giving me a few moments of your time, and I will see you next week. Thank you.